testing the audio real quick. What is up, YouTube? So, I had a nice day. I took one good trade. I'm currently still in the trade at the moment. There were some other trade opportunities, and I want to go over them on gold and on euro, and then also just give some updates on the setups we were talking about the previous live stream. Okay, which was yesterday night. So the trade I took was on Solana. It was a Model 1 distribution, and I actually posted it in my Discord before it actually played out. Let me just copy and paste the image to show you guys. Boom. This is what I posted. This distribution play where if we break the market structure low and we get the back test, I'm shorting it down to X marks the spot, which is the general target of a distribution, the range low. So as you can see, I have the same scenario and the same setup on my chart right now, already in replay mode. And going over the higher time frame first real quick is that in general we were in a premium setting of this bigger range that we're in. We still have some daily supply above us, and price tried to break structure from the low up, meaning it tried to break this structure pool, but it SFP'd it once, and then that low it got SFP'd again, and then we started breaking structure back to bullish. However, instead of having that follow through after that bullish break here, we started to create a range that's looking like a distribution. So that's also not the bullish follow through you want, but you also don't have the bearish follow through. So it's kind of giving like range vibes and not really a clear direction so far. However, we can just trade the local ranges. So on the 50-minute time frame, we have a clear looking range. We have a clear looking Wyckoff Model 1. When does this get confirmed? Once you break structure from the low up between tab 2, which is this, and then tab 3. So the structure from the low up goes like this. You have a high, low, higher low, higher high, higher low, higher high, higher low, higher high. And then we want to see that break. Once this breaks, it confirms that the Model 1 is in play and we can target X. So as shown on the picture, I wanted this market structure low. Let me get rid of these drawings to make it more clear. As you can see, I wanted this low to break right here, and then I already put it on my chart, but as you can see, we had this 3-minute order block remaining underneath the range low, indicating that there's actually a reason price could bounce after breaking this low. And then my idea was to break that low, get that bounce from the demand zone, and then short the back test, right? Short the back test and then target way, way lower. So all the way down to here, okay? So that was the initial idea. That got adjusted slightly since letting price play out. We could see that it was respecting this downwards market structure pool from the top down right here. Low, lower high, lower low, lower high, lower low. So it was respecting supply, and on the left we only had some sell side liquidity remaining, so it should be an easy sweep down towards that range low. However, instead of breaking it, we tapped into the demand and got this bullish expansion away. So we didn't get the break we wanted. However, an SFP can just be temporary, What do I mean with that? Well, if this SFP doesn't break this high, and on the way up between these points, it starts breaking structure back to bearish, price is still going to come back towards this low, even though it was an SFP at first, right? So even if, because this is an SFP and not a break, if you start breaking structure between this leg up, between this point and that point, you can confirm the price is going to come back to this low, and then what is there to help price up, right? Nothing, because you already tapped the demand. It's already mitigated. So once you start getting this this structure break in this move up, you can confirm the price is going to come back to the low, and then once it comes back to the low, what is there to hold price up? Absolutely nothing. So even though we got that SFP in the first place, I was still looking for a short if we started, if we kept on respecting this structure, this downward structure pool showing that supply is still in control. So I'm talking about this downward structure pool. Even though this is an SFP, this SFP can be temporary. And if we start breaking structure within here, this confirms that this downward spool is going to continue itself and that the model 1 is actually still going to be in play if we break that low after getting this market structure break. So I was still watching for that break and letting price develop itself. It tapped into that supply zone we were talking about, and it had this internal upwards pull, high, low, higher low, higher high. So right now our internal low is right here. So once we break this low, that confirms that price is going to come back to that low. And then what is going to hold price up if we come there, right? Not much, in my opinion, or in general from a supply and demand perspective. So what happened? We tapped in that supply. We broke the low right here. That's where I entered my short position. I put my stop above that high. This is the lower high for the lower low. Price should not come higher than that point. And price needs to break this low for our short to survive, right? That's very important. But because of the bigger model 1 going on, I was expecting that low to break. And then very soon, price started dumping down, absolutely neglecting that market structure low and breaking through it. Also getting acceptance back inside the bigger volume profile of this range right here. As you can see, we were at a crucial point on the chart. So you can kind of say, in a way, I pre-shorted the primary break, but that internal boss was enough for me. It was just showing me that supply right here was in control, and we were going to continue this downward structure pool. And I shorted it with my target all the way down to here for a 7% gain. However, I would take one take profit at this low just because it's the extreme demand of the range. So in general, yes, if you have a Wyckoff Model 1 distribution, it should hit the range low. That is the objective of the Wyckoff. But this is a Wyckoff on a pretty big time frame. So you can also trade these concepts on the 2-minute only, like very zoomed in. And then I will always just target the range low. But once they're on like these bigger time frames, I like to take like a take profit in between, purely for my mental and my psychological game within the trade. Because hitting this, I'm already up 4%, right? I'm already up 4%. So I was like, I would like to hit a TP for my mental, and then I'll keep my stop loss the same if there hasn't been any structure changes in the meantime, and then I'm already in a winning trade, and I don't have to worry about the trade anymore. So that was the plan. Price ended up, let's get rid of this volume profile. Price ended up creating a range right here. So let's stop right there. So we ended up creating a range, deviating the range low and deviating the range high. So right here is your range. Deviation of the range high, get a local structure break, get a back test of supply, and you can expect price to come all the way down to the range low, which is exactly what happened. There you go. Could have easily been a quick little scalp. And I think also that's where a lot of people get trapped, because instead of looking at it from a range perspective, they will look at this as a bullish break, right? They will see this and they will count it as a bullish break, and they'll just try to long the potential higher low for the higher high, and it just doesn't come, right? Instead, the break is so poorly, and it took so much time to get there, that you should already know that, this is going to be a range deviation. And then once you broke that upward structure from the low up, talking about this pool right here, once you broke that, a lower high for a lower low was expected. We tapped into range supply, and then you could have actually scalp shorted that back down towards the range low for a potential extra 2.7%. Very nice scalp trade. I didn't take it. I wasn't paying close enough attention for on Sol to take this. And I was already short, right? So I didn't want to ruin my average entry. But nice little trade. Now, right here, we hit my TP1. It was a 30% take profit, so I realized around 1.3% on the trade. Got my stop loss above that high. But I knew from here that there were multiple scenarios that could happen. Zooming back out again, we still left this 1 hour order block above us. And then from a volume profile perspective, we tapped the range low and we hit extreme demand. So I was expecting a bounce, and I was also expecting potentially for price to come all the way back up to hit that supply zone and then come down, where this would be the last point of like resistance from a Wyckoff schematic perspective, right? Oh, my throat is killing me, guys. Okay, my apologies. So, what could also happen, which I knew, was that this local range deviation play could turn into a Wyckoff Model 1 accumulation, where this was your initial range low, the sweep of the range low, and then your second sweep indicating a Wyckoff Model 1. What confirms your entry, as I just said, a market structure break back to bullish from the highest point between tap 2 and tap 3, which is this. So break that high confirms coming back towards that range high. But you did have to be aware of this local supply chain that we had going on the 5-minute time frame. So it could just break the 1 minute back to bullish to continue this 5-minute downwards pull, right? You have to be aware of that when you want to take this trade. Well, price came up. We started breaking through it. This is your sign it's going to fail. You got the back test. This is where you would long. Stop below the low, target the high. Risk to reward wasn't there, but as you can see, it did play out. And then I think it took like ages. Oh, damn, that really took ages. Yeah. So it did play out, but it kind of turned into a bigger Wyckoff schematic, but your clear invalidation was below this low. So you would have been good either way, but after that, price just died off, didn't do anything. Before it created like a more of like a Model 2 vibe where you have your 1, 2, 3, and then you went all the way up towards range supply. So, oh, my throat, guys. Mind you, my stop loss has been at this high for all this time, and exiting replay mode now. Exiting replay mode, we got the rejection from that high. That also deviated the volume profile high. So now I trilled my stop loss to this high right here, and I'm still targeting this low. I did take one more profit right here when I came back to the computer after witnessing all of this. Just a 20% extra TP, so a 50% TP in total. So I have realized over 2% on this trade, and I have 2% 2% unrealized still running, right? So I've realized 2, I'm up 4%. If it comes down, we make like 5 to 6%, which would be nice. But I'm still in this trade. So to conclude it or to summarize it, Model 1 distribution with a break. Instead of entering on the break, which we didn't get, I entered on the reconfirmation after SFPing it, because that's still a valid way to short. Okay? So that was my Sol trade. I'm still in it. For approval of entries, all that stuff, go to my Twitter right here, where you can see exactly where I shorted it, right here on 171. So that's right around here. So yeah, nice entry. And let me check 171. Yeah, there you go. Right around here, Bybit and Mexi numbers differentiate tiny bit, but that's right around on this break right here. And my stop loss is above that high now, still targeting this low. Okay, on Bitcoin, as I told you guys, we were watching. I made a post this morning about wanting a potential long into a short. Um, but Bitcoin just died. So we deviated the range high, and we got a structure break right here. I wasn't too excited to take just a single break after a single deviation, especially because I didn't like the way price actually came down after deviating the high. So adjusting the high back to the initial range high right here, you can see the deviation right here twice, and then right here is where you actually broke structure. But the way price came down to break the structure, it left loads of buy side liquidity above us, right? So shorting just a single break with my stop above a liquidity return to zone point, wasn't too excited about it. I was hoping price was going to turn into a Model 2 accumulation right here where you have your 1, you have your 2, and you have your 3. However, we didn't break market structure back to bullish. This was your most important high, which was not worth it from a risk to reward perspective. But I do want to go over this real quick because I saw people getting trapped right here that longed this demand zone. Saw people getting trapped over there. And what I want to mention on this is that, first of all, okay, you're trading a 2-minute break of structure. But let's say you did. Okay, let's say you did and you took this break of structure hoping this was going to be a Model 2 that was going to play out. Well, what happened afterwards would have already made me de-risk the trade. Because right here, you left behind a 2-minute demand zone. Just because you left behind this 2-minute demand zone, the moment you create a second market structure leg right here, I wouldn't move my stop loss from this low to that low. Because normally if you enter on the break, you put your stop above the low that create that break and then you target higher, right? For that Model 2 accumulation all the way up here for a 4% gain, okay? However, you left 2-minute demand, a 2-minute order block behind. So I wouldn't want to trill my stop loss because maybe you take this low, you wick into it, and you still go higher. However, what did price do? We mitigated demand and then came up, breaking structure in the process. So your entry confirmation right here is invalidated right here. Well, maybe at some point people will say, okay, maybe it is a fake break just to tap demand and go higher, which in my opinion is a valid thought process. I could see people thinking that. Then what would have made them, or what should have made them exit the trade, was when price came all the way back up to hit this supply zone and then breaking structure. These are equal highs. So I count them, right? And then we start breaking structure. If price does this, this is indicating a potential Model 2 distribution that ended up hitting its target right here. So if people kept their stop here thinking this was going to be a fake break in demand, the moment you get this move up with the market structure leg, you move your stop loss to this low, this demand zone. The moment that leg starts breaking back to bearish without taking that high or breaking that high, you de-risk, you enter, or you put your stop loss here to entry, or you just exit the trade for a slight profit, okay? But this was clearly your sign to get out of this trade and not hold on to this long idea anymore. Because in general, it would have been a slow bleed. You would have watched price action for 2.5 hours and then getting stopped out to see price take the low and move higher. So I'm sorry for the people that took that, but this was your sign to get out of that trade. Okay? So just wanted to mention that real quick on Bitcoin because I saw people in the Discord get wrecked on that move. Okay? Now, on euro, I told you guys that we were in this range, and that we took all buy side liquidity, and we started breaking local structure back to bearish after breaking it back to bullish on the left here. And I couldn't give you a clear setup because there weren't really any POIs, but I told you to watch your structure. Well, for the people that did, you guys should have a banger of a trade, because as we follow structure down on the highest time frame that is valid, from the top, we have a high, low, lower high, lower low, lower high, lower low, lower high, lower low. And then right here, we SFP'd that high. Okay? Let's put that SFP in. So we SFP that high, and then was there a reason that price SFP'd it instead of just putting in a lower high for a lower low? Well, let's go on a lower time frame. Oh, you see that? We had this little 15-minute order block remaining above the range high. So could price grab more buy-side liquidity and the stop losses above those highs just to mitigate supply and go lower? Absolutely. Those are always the extra nice setups, because you can clearly tell the price had a reason to come higher before continuing the market structure trend down. Zooming in on what actually happened over there is that, okay, we had a nice little accumulation at the bottom to take us up towards the high. As you can see, this is an Asia high, so it's just lovely, right? It's a classical setup for forex plays. This is your Asia high. London opens right here. London pushes price up, takes the Asia high, hits supply, breaks structure back to bearish, right here, my bad. Gets the retest into the range supply. Okay, let me rephrase that differently because I got a brain error. Okay. Again. So, what happened? Price was trending down. I told you guys to watch your market structure. This was your 30-minute market structure high. Okay? Right above that, we had this 50-minute order block with imbalance. So there was a reason for price to potentially come higher and actually take out that high and SFP it instead of putting in a lower high for a lower low, because we had supply remaining above it. Then looking at it from a session standpoint, it's very typical for Forex for Forex pairs that on London Open, you either take out the Asia high or the Asia low, tap supply, break market structure, and then go towards the other side, right? So this is also actually your Asia high. London opens at 9 right here. So where London opens, it pushes price up, taps into supply. You break market structure from the low up, back to bearish right here. Get the retest in this range supply, respecting market structure from the top down like this. Boom. And then this should have been your entry. Should have been a no-brainer. Stop loss above the high, and then you can target this low. However, if you zoom out, what is there to stop price from taking all of these lows and all of these lows and then tapping into supply or into demand? Nothing. That's also what I told you guys yesterday. I couldn't give you any bounce levels or demand POIs because there weren't any until this little fella right here, right? So if you just watched price, I'm on the 2-minute time frame. It took it 6 minutes to just dump all the way down to that demand before you got the bounce. So for anyone that took this, congratulations. The reason why I did not take this entry is because if we check it, it's actually at 10 a.m. It's around 10 a.m. And that soul trade I was talking about was also around 10 a.m. As you can see, it's the same time zone. So I was actually focused on Solana and not on Euro. So managed to get the Solana one, and that was a winning trade. So I missed this Euro one because I wasn't paying close enough attention. But for all my Euro watchers and that watch my streams regularly and know about their market structure, everyone should have taken taking that trade in London. So that was an absolute banger. I just wanted to go over that. Um, so you guys know how these forex pairs work sometimes, because sometimes it's literally just too easy. Takes out the Asia high, break structure back to bearish, go to the London low or the other Asia low, depending on where the lows are. So last thing I want to go over is gold. Gold has been moving terribly, like absolutely terribly. It's not been giving any setups, but regarding that lower high, lower low I was talking about, following this market structure pull from the low up where we got that break, we were expecting a lower high for a lower low, but that lower high was only going to take place if we are breaking structure from the low up, this low up, right? Well, we got that break. So we got that break, but then if we zoom in on the break itself, like what is this price action? Like, this is so shitty in my opinion. If you were on the 1 minute, you could have tried something where you had a little model 1 distribution here that broke structure and left behind this 1 minute supply zone, which is an institutional block because it's backed by this local white gold model 1. And you could have shorted the back test after the reconfirmation right here. So then your short would be right here. Your stop would be above that high, and you would target this low and then that low. But it would have just been a pain in the ass, and I wouldn't call this a high probability setup. The way the candles were showing itself was very wicky and tight. So yeah, gold has not been moving nicely, but we know those times will come back, and then we will own the gold markets as well. But in general, we are breaking that structure from the low up, indicating that the lower high for the lower low on this bigger time frame market structure drawing could be in place. My throat is killing me, guys. So that's going to be me. That's going to be it for me today. I will see you guys tomorrow morning. Hope you guys had an amazing trading day, and peace out.